I learned the hardest way that markets don't just take your money, they take your story. Unless you write it with one unbreakable rule. I'm speaking to you from the quiet space. Traders rarely visit the minutes before a decision, the seconds when a cursor hovers over buy, the breath you hold when a position turns against you. In that silence, I hear the faint echo of Jesse Livermore, a man who saw markets as mirrors and rules as lifelines. Tonight, I'm going to walk you through the one rule that again and again stood between his fortune and oblivion. And I'll do it in a way that doesn't feel like a history lesson, but like a conversation you wish someone had with you before your first drawdown. If you had to live by just one trading rule for the next year, what would it be and why? Tell me below. I'm reading every single one. I didn't come to this rule through book wisdom or tidy aphorisms. I came to it the way most of us do, in the fog of a losing trade, the clatter of an equity curve slipping lower, the stubborn belief that I was almost right. Livermore called that a dangerous place, where the market tempts you to abandon your plan and average down because it can't go any lower, or double up because the bounce is overdue. He knew something we forget, that every decision at the screen is a vote for the trader you are becoming. Rules are ballots. Break them often enough and you elect your own ruin. When I trace Livermore's arc from the bucket shops to Wall Street's marble halls, one theme keeps surfacing like a buoy in rough water: clarity under pressure. He never pretended the market was fair. He simply accepted it was final. Prices were the judge and jury. The rule that saved him was not a trick, not an indicator setting, not a secret platform feature. It was a boundary between action and impulse, between listening to price and being baited by hope. I'll name the rule soon. But first I want to show you the terrain it had to defend, the battlefield of our own minds, where fear and greed recruit us into bad positions and then promote us to captains of denial. Think about your last mistake. Was it analytical wrong trendline, poor earnings red? Or was it emotional couldn't cut, couldn't wait, couldn't sit? Livermore insisted the big money is made in the sitting, in the patience to let a right position become very right, and the discipline to let a wrong position die small. Those aren't two ideas. They are one rule expressed on opposite sides of the P and L. Hold the wind when it's behind you. Drop the anchor when a storm isn't yours to fight. And yes, the market will punish you for both once in a while, but it will bury you for ignoring them consistently. Tonight, we'll dissect the paradox traders wake up to every session to win. We must be aggressive with trends and ruthless with losses, soft hands and a hard spine. We'll step into Livermore's mindset and translate it for screens that glow 24/7s, for algos that don't sleep, for news that hits faster than our hearts can slow down. By the end, you'll have the architecture of a simple rule you can write on a sticky note above your monitor and live by when the candles start to blur. Stay with me. In the next section, we enter the inner conflict, the market's favorite trick, the moment when your analysis says one thing and your pulse says another, and you must choose which voice to obey. Asterisk. The cruelest paradox in trading is that the market rewards the behavior that feels worst in the moment and punishes the behavior that feels best. I've stood at that crossroads more times than I care to admit. One path paved with relief, the other with discipline. Relief is closing a winning trade too soon so the good feeling can't be taken away. Discipline is holding it until the tape, not my nerves, says it's over. Relief is adding to a loser because the pain might vanish if I can just get my price back. Discipline is cutting it and accepting that the market has spoken. This is the silent duel every trader fights between what eases the heart now and what serves the account later. When you feel that tug of war, comfort versus conviction, what side do you usually pick and why? Drop your answer below. Your awareness may help someone else. Jesse Livermore saw this conflict as the market's most reliable angle of attack. He believed prices don't move to make you rich. They move to make you reveal yourself. When the tape grinds upward and your P and L blooms, the pressure to bank early isn't just greed, it's a fear of reversal dressed in prudence. When the tape slides against you, the urge to average down isn't just hope, it's ego in disguise. Bargaining for a way to be right without admitting you were wrong. The market doesn't need to read your mind. It can read your actions, and it knows the choreography: early profit taking, late loss staking. It's a rhythm it can tax indefinitely. Here's the paradox stated cleanly. Profitable trading demands that I do the thing that feels emotionally expensive and avoid the thing that offers emotional discounting. Letting a winner run feels risky. My mind starts itemizing all the ways this green can evaporate, assigning it to bills, vacations, reputations. Cutting a loser feels like a verdict. My identity objects to the notion that I misread the tape. But Livermore's philosophy flips the emotional invoice. The cost of comfort now becomes ruin later. The cost of discipline now becomes freedom later. He would say, in effect, you either pay the small fee of being uncomfortable or the large fine of being undisciplined. To navigate this, I imagine a courtroom where price is the judge, volume the jury, and my rule book the law. Feelings may deliver passionate opening statements, but they have no standing. The only admissible evidence is the behavior of the market relative to my thesis. If the facts contradict me, the verdict is guilty, close it. If the facts confirm me, the verdict is proceed, sit tight. This courtroom metaphor isn't cute. It's a practical structure to root decisions away from the limbic system and into a higher standard of proof. Livermore's notebooks recounted a discipline that bordered on ritual. Entries only when the market proved his line of least resistance. Exits only when the tape withdrew that proof. It's not the absence of emotion he had plenty, it's the supremacy of process. He accepted the paradox as the tuition of the profession, to feel exposed when right, and embarrassed when wrong, and to act opposite to the emotion in both cases. And that brings us to the core problem, the trap that springs when we misread the paradox and answer emotion with more emotion. In the next section, I'll show you how that trap sets in. The subtle sequence from a tiny deviation to a full psychological spiral, and how traders smart, well-read, well-intentioned end up turning a paper cut into a hemorrhage. Asterisk, every blow-up I've ever seen began as a whisper, one tiny exception to a rule, justified by a feeling that sounded reasonable. Here's how the trap springs. Not in theory, but in the clock-ticking reality of a live market. I put on a position that fits my plan. The tape moves against me, not violently, just enough to smudge the comfort. My stop is clear. My risk is defined. Then the first whisper arrives. Give it a little more room. It's phrased like prudence, like I'm being generous with market noise. But under the surface, it's fear negotiating a longer leash for my ego. I don't move the stop, not yet. I simply promise myself I'll be decisive if it keeps sliding. Be honest, what's the first story you tell yourself when a trade inches toward your stop? Share it below. Calling it out by name steals its power. The next candle stretch is red. I feel the heat rise, but I also feel a thrill, that gambler's tingle that says, if I add here, I'll have the perfect average. I tell myself I'm being tactical. I tell myself Livermore added on reactions, leaving out the part where he added to winners in rising trends, not to losers and falling ones. That's how the mind edits the past to suit the present. It quotes the legend and deletes the context. The second whisper says, you're experienced. You can handle this size. It flatters me into disobedience. Now the market has me onto fronts. Price is attacking my account, and narrative is attacking my judgment. I start scrolling for confirmation, Twitter, news feeds, chat rooms, anything that lets me say, see? The market's overreacting, but the tape doesn't care. It widens the ranges like a storm lung filling with thunder. My P and L begins to matter more than my thesis. I'm no longer trading the market. I'm trading my reflection in the mark-to-market mirror. That's the pivot point when the external game becomes an internal defense. Jesse Livermore warned about this exact drift. He believed the most expensive words on Wall Street are just this once. The first exception to a rule isn't a single event. It's a structural breach that invites every future exception through the same door. In his world, discipline isn't a decision. It's a design. The rule exists so I don't have to relitigate ethics at the worst possible time. But when I let the whisper become a policy, I reverse the architecture. I place my judgment inside my feelings, rather than my feelings inside my framework. The trap tightens through time. Each minute I delay the cut, the loss changes shape from a risk I chose to a fate I'm enduring. That shift makes me feel victimized, and victimhood hunts for a rescuer, a reversal, a headline, a miracle candle. Rescues happen often enough to teach the wrong lesson. I catch a bounce, escape flat or slightly green, and my brain throws confetti. It stamps approval on a process that was rotten. This is reinforcement learning of the most dangerous kind, misbehavior paired with relief. Then comes the real cruelty. The next time I face the same setup, I'll repeat the sequence, but markets don't pay out every time, asterisk asterisk. When I strip away every excuse I've ever made, I'm left with Livermore's blunt verdict. The tape is truth, and truth doesn't negotiate. I want to speak to you not as a commentator, but as a trader who's been dragged, kicking, from opinions to evidence. When I imagine Jesse Livermore standing beside my desk, I don't hear a mystic or a romantic. I hear a contractor measuring the load-bearing walls of a structure, trend, position, risk. He called it the line of least resistance, the direction in which price wants to travel with the least argument. To Livermore, my pride didn't matter. My research didn't matter. My feeling about fair value didn't matter. If price was moving, it was telling me a story. My job wasn't to rewrite the plot. It was to align with it or step aside. If the tape contradicts your thesis, which one wins in your process, your research, or the price? Tell me in the comments. Your answer is your edge. Livermore's perspective begins with a presumption of guilt on himself. He assumed he could be wrong, and designed everything around that assumption. That's not pessimism, that's freedom. When I enter a trade with that lens, I'm not trying to prove I'm right, I'm trying to find out quickly if I'm wrong. He believed the market pays the humble by exposing error fast and punishes the proud by letting error linger. It's why he sought confirmation after entry, not the pat on the head of a tiny uptick, but decisive price behavior that validated his thesis. No confirmation, no marriage. He moved on. He also refused to average down on a loser. The nuance here matters. He would pyramid into strength, but only after the market produced profit, and then invited more risk by continuing in his favor. That's the line of least resistance in practice. Add to the right kind of pain the discomfort of riding a winner, not to the wrong kind. The agony of nursing a loser. He separated those sensations with surgical clarity. The former is growth, the latter is attachment. Risk, to Livermore, wasn't a paragraph in a policy document, it was oxygen. He framed capital as a soldier on the field. Waste it, and you reduce your future opportunities by arithmetic and your future judgment by psychology. A trader gasping for capital cannot think, so he built his method around survival first, expansion second. Sit tight when right, get out fast when wrong. Never confuse motion with progress. He accepted that he could miss the exact top and bottom. Because he wasn't hunting trophies, he was harvesting trends. I can almost hear him when I hesitate. The market is never wrong, your opinion is. It's not an insult. It's a relief. If the market isn't wrong, then I don't have to make it right. I only have to align, and alignment cost me the price of letting go. Livermore saw letting go as a skill, not a surrender. Take the small loss with the same grace you take the small gain. Respect the stop as if it were someone else's money you're managing. He was ruthless not because he enjoyed pain, but because he understood compounding of both capital and behavior. Small right actions compound into big outcomes. Small wrong actions compound into catastrophe. Underneath all of this, there was one keystone Rouland axiom, so simple it's boring, so hard it's heroic. I won't elevate it yet. That moment deserves its own frame. But know this, every practice he kept, every ritual he honored, orbited that single law like planets around a sun, the courtroom of the tape. The line of least resistance, pyramiding into strength, refusing to negotiate with losing trades. These are not disconnected techniques. They are guardrails built to protect one rule from 1,000 rationalizations. So here's the pivot. We've mapped the battlefield and studied the general. Now we step into live fire. In the next section, I'll take you into a real story drawn from the rhythms of historic campaigns and the feel of modern screens, where a trader like you and me faces the moment that makes or breaks accounts. You'll see how easy it is to betray the Rouland, how different the path looks when we keep it. Let me take you into a trade where I almost broke myself and the one rule stood between me and a headline I never wanted to read. It was a Thursday, late in the New York session, liquidity thinning like breath on cold glass. A fast-growing tech stock, I'll call it Novanet, had been climbing for weeks. The line of least resistance was up, clean as rails in fresh snow. My plan was simple: wait for a pullback to the 20-day. Look for sponsored buying on the tape, then step in with tight risk. I'd watched it all morning, the bids stepping higher, the rejections quick. Around 1:40 p.m., the stock exhaled. A 3-candle slide carried price into my zone, volume softened. Then a sudden surge of green absorbed the offers. That was my confirmation. I entered with a starter, 1/3 my intended size. Stop a touch beneath the most recent swing low. In that first minute after entry, would you add, sit tight, or bail? Tell me in the comments. Your instinct tells a bigger story than you think. Here's where the story could have forked the wrong way. 10 minutes later, a rumor hits and analysts concerned about next quarter's margins. Nothing confirmed. The tape jittered like a horse spooked by wind. Novanet faded back toward my stop. The voice of relief whispered, widen it, it's just noise. The voice of risk management said, the market is speaking, let it. I did nothing. The stop stayed. Livermore would have called that passivity active discipline, refusing to change the terms mid-game. Then something important happened. Price ticked down to my stop area, paused, and printed a heavy volume shove upward, eclipsing the prior red by a comfortable margin. Demand had arrived. That was my second confirmation. I pyramided another third. Not recklessly, not to feel bigger, but because the market had just paid me information. Buyers were defending the thesis in real time. Livermore added when a campaign proved itself. I was following that template, one brick at a time. By 3:05 p.m., Novanet was pressing fresh intraday highs. I wasn't euphoric. I was working. I trailed my stop to just under the most recent higher lower level the stock had no business losing. If my read was right, Then came the test. A headline dropped. A competitor guided lower. Algorithms fluttered. A sharp 2-minute drop shook the trend like a tree. My open profit shrank fast. The old me would have grabbed the green to lock it in. The Livermore me said, sit tight. When you're in harmony with the direction, protect the line, not your feelings. I didn't sell. The stock kissed my trailing stop level, held, and reversed with force. Into the closing range, momentum expanded. I added the remaining third into strength, not because I wanted more size, but because the market had earned more of my capital's trust. I scaled out methodically into the closing push, leaving a runner for a potential day to trend. The outcome was strong, but the score isn't the lesson. The lesson is that every fork in that trade tempted me to disobey. The rumor invited me to widen. The stop, the early green invited me to take quick profits. The midday shake invited me to panic sell. Each invitation, if accepted, would have trained me to be a different trader, the kind who manages emotions, not positions. Livermore's fingerprints were everywhere. Wait for the market to prove the path. And when the path holds, don't negotiate with losing levels. Trail a stop where the story must remain true. This wasn't stoicism for its own sake. It was alignment, capital marching in step with truth as the tape defined it. But let me not romanticize it. Even inside a well-executed trade, there's a moment the floor drops out from under your stomach, that flicker of doubt that turns every second into an hour. In the next section, I'll take you to that exact heartbeat, the emotional low point where the right decision feels impossible and the wrong one feels merciful, and I'll show you how the one rule lights the way out. The market didn't just test my position, it tested my identity. And for one long minute I almost chose to protect my pride instead of my capital. Here's the heartbeat I promised you. Novanit closed strong, and I slept like a general after a victory, half armor on, half dreaming of day to continuation. The morning had its own script. Pre-market, a whisper thread turned into a headline: supply chain bottlenecks industry-wide. Futures softened first, then the stock. Liquidity thinned as if someone pulled the plug. I watched the book like a pilot watches the altimeter after an engine coughs. The first prints weren't catastrophic, but they were surgical, straight to the level that defined my thesis. And in that instant, the old courtroom filled with noise. The headline is overblown. Widen the stop. It'll bounce on the open. You know this company. That wasn't analysis. That was fear dressed in my voice. What made it worse was how easy the wrong choice felt. All I had to do to save my ego was drag a line on a chart. No awkward realization, no taking the loss, no admitting that the market could make a fool of me between dinner and dawn. You've been there. One pixel can convert process into pleading. In your worst drawdown moment, what easy choice whispered to you, and did you take it? Be honest below. Someone needs your story more than your image. As the bell approached, I remembered a line I keep on a yellowed card by my screen, my shorthand for Livermore. When a stock proves you wrong, let it. He never said the market was kind. He said it was clear. Price was about to rule, not negotiate. I felt the cold tug in my stomach, the sensation traders know, like a trapdoor opening under the ribcage. The gap widened. The open printed. For a breathless few seconds, my level held, then cracked. The tape flushed a handful of points in half as many seconds. My trailing stop triggered with slippage that stung more than I wanted to admit. I was out, flat on the remainder. Green on the campaign, but with that metallic taste of a near miss in my mouth. Here's the turn. The very next minute, Novanit staged a dead cat bounce so seductive it almost pulled me back in on impulse. The book refilled, retail chased, social feeds declared the overreaction. If I had widened the stop, that pop would have rewarded my misbehavior. I would have learned to keep breaking glass and trust that luck would stop the bleeding. But the bounce died at the underside of the broken level and rolled over with twice the volume. What followed was not a market seeking my comfort. It was a market seeking its price. Downside open like a trapdoor. By lunch, the stock was 9% off highs. By the close, it was a lesson written in red. This is the anatomy of the low point. It is not the money, though money hurts. It is the choice to either betray your rule or betray your ego. Livermore's gift was not clairvoyance. It was the ability to lose correctly. He failed small to stay emotionally solvent. That was the turn for me, not the stop out, but what it preserved: my capacity to sit flat, reassess, and even take the other side if the line of least resistance demanded it. When I looked at my screen that afternoon, I didn't see defeat. I saw oxygen. I still had soldiers. I still had structure. I still had the ability to act, not just react. That day, the one rule stood between me and a spiral, the rule that forbids negotiation with a losing position. That frames capital as sacred and ego as negotiable. You know the rule by feel, even if you haven't carved it in stone yet. In the next chapter, I'll name it plainly, the way Livermore would know poetry. No euphemism, man, then I'll give you the rationale that makes it unbreakable. Even on the darkest tape, stay with me. We've gone down into the valley. Now we climb with a sentence you can tape above your monitor and live by when the candles blur. Asterisk, here it is. Plain and unromantic, the one rule that saved Jesse Livermore, and the only one I trust when the lights go blood red. Never let a small loss become a big loss. Say it again with me, without the clever wording or the market poetry. Cut the loser immediately, no discussion, no appeals. That's the rule. Every other habit waiting for the line of least resistance, pyramiding into strength, sitting tight on a true trend exists to support this one commandment, because the market will forgive a clean loss. It will not forgive a negotiated one. If you had to write your personal version of this rule in fewer than 10 words, what would it be? Post it below and pin it to your process. I learned that Livermore's genius wasn't in predicting the future. It was in ending the past fast. A loss is a time machine. The longer I hold it, the more I live in yesterday's thesis, borrowing hours and sanity from tomorrow. Cutting is how I return to the present. When I obey the rule, something subtle but colossal happens. The market stops being my adversary and goes back to being my teacher. Price says, "You were wrong here." I answer, "Thank you," with a sell ticket. Why does this rule work? Because it aligns with math, with psychology, and with the physics of trends. Math: a 10% loss needs 11.1% to recover. A 20% loss needs 25%. At 50%, you need 100%. The curve isn't merciful. Cutting small protects compounding, the only miracle we get in this business. Psychology: a small, voluntary loss preserves self-trust. A large, negotiated loss corrodes it. Once I betray myself, my next trades are driven by repair, not by edge. The rule quarantines that infection. Trend physics: markets trend because imbalance persists. If price invalidates my level, that imbalance favors the other side. Hiding from that fact is how I get steamrolled. Livermore knew the seduction of exceptions. He also knew that we don't lose to the market, we lose to our stories about the market. So he designed the rule to be unemotional and binary. Price crosses the line, out. Not because I feel scared, but because the terms of the trade have expired. The story is no longer true. By cutting, I don't admit defeat. I acknowledge reality. That shift is liberation. You might ask, what about whipsaws? What about the times it clips me, then rips higher without me? I've been there. It hurts. But the rule isn't a painkiller. It's a seatbelt. Seatbelts leave marks in rare crashes. Their job is to keep you alive for the next drive. When a stop out is followed by a perfect rocket, I remind myself, the alternative is not certainty, it's catastrophe. And catastrophic losses don't just dent equity, they shatter identity. You can't compound if you're rebuilding yourself from rubble. Livermore paired the rule with a posture, ruthless with exits that prove him wrong, patient with entries that prove him right. He called it waiting for the market to confirm. That wasn't superstition. It was respect. Respect for risk, respect for the tape, respect for the idea that capital is oxygen. When I cut fast, I breathe. With breath, I can see. With sight, I can strike when the line of least resistance invites me. There's another layer. Cutting losses is how I afford to let winners run. You cannot sit tight on a true move if a graveyard of unresolved losers lurks in your book. The emotional margin call will force you to harvest the living to feed the dead. The rule ends that cannibalism. Kill the losers. Nourish the winners. That's not cruelty. That's husbandry for a trading farm built to survive seasons. So write it where you can't ignore it. Never let a small loss become a big loss. Build your tactics around defending that sentence. Stop set before entry. Sizing that anticipates pain without inviting panic. A review ritual that praises correct cuts even when they sting. Because the only thing worse than losing money is teaching yourself that your process is optional. We've named the rule. In the next section, I'll move from principle to present tense how modern traders, surrounded by 24/7's news, options gamma, and machine speed markets, can live this rule without becoming timid. I'll show you how to adapt Livermore's discipline to screens that never sleep, and how to keep your edge awake when you do. In a market that moves at machine speed, the only edge a human keeps is the rule they refuse to rewrite under pressure. I trade in an era Jesse Livermore couldn't have imagined options. Flows painting the tape in milliseconds. Headlines detonating from a dozen feeds at once. Liquidity that looks deep until it isn't. But the one rule that saved him: never let a small loss become a big loss, translates perfectly. Because the biology that breaks traders hasn't changed. My prefrontal cortex still tires. My limbic system still screams. My ego still wants to be right. Technology made execution faster. It didn't make discipline automatic. What's the single modern distraction that most often pulls you off plan news, options Greeks, social media, or something else? Call it out below so we can build defenses together. Here's how I bridge Livermore's world to ours. He used the tape as truth. I use structured market data as my modern tape price, volume, volatility regime, and time of day behavior. Where he read the curve broker's tone, I read liquidity sweeps and order book imbalance. But the purpose is identical, to confirm the line of least resistance and cut ruthlessly. When that line snaps, I automate what I can, not to trade for me, but to protect me from me. Hard stops live on the server, brackets go in with the order, and alerts hit my wrist if conditions deform. The structure is there so my future self, tired or elated, can't negotiate with the chart dot and options. The rule grows sharper, with theta dripping and vega swinging. A small unrealized loss can blossom into a crater just from implied volatility compressing, while price drifts sideways. So I treat options like milk, not wine. They don't age well. Time stops replace price stops when decay is the killer. If I buy calls on a breakout and FR was pumped, I'll predefine a volatility failsafe. If FR drops X%, or the underlying underperforms the market's breadth by Y for Z minutes, I'm gone. No sulking, no second chances. Livermore's no averaging down becomes no calendar of hope. I don't roll to buy time unless the thesis remains intact and the new risk-reward is superior, not merely survivable. With algos, the trap is different. We confuse speed with edge. I remind myself, latency is their arena, clarity is mine. My advantage is the ability to do nothing. Machines must participate. I can abstain. In choppy, low-conviction sessions, my best trade is often the restraint not to invent a setup because my platform is open. Livermore sat out dull markets. I close the blotter, go flat, and let the noise burn itself out. Boredom is not a signal. Impatience is not a setup. Social media is the new bucket shop. Rumors don't circulate, they accelerate. Livermore learned early that tips cost more than tuition. I treat feeds as lagging sentiment indicators at best, and psychological grenades at worst. If I read something that tempts me to move a stop, I step away from the keyboard for 2 minutes. If the urge survives a timer, it's probably not discipline, it's dopamine. I do not act. The rule survives because I starve the behaviors that starve the rule. Risk sizing is where modernity can help. I use volatility-adjusted position sizing, scaling my uni risk by ATR or realized volatility. So I'm not taking the same dollar risk in a storm that I would on a sunny day. Livermore pyramided as the market proved him right. I mimic that with dynamic sizing. Start at half risk in uncertain conditions and only scale when the market demonstrably agrees. That way, when the rule forces a cut, the tuition is small, the lesson is large, and my emotional bank account remains funded. Most of all, I protect the environment. Livermore needed solitude to hear the tape. I need stillness to hear my process. I pre-commit to a maximum number of decisions per session. Decision fatigue breeds exceptions. If I hit my cap and haven't found a quality A+ setup, the day's work becomes not trading. That isn't laziness. It's respect for compounding. One undisciplined afternoon can tax a month of precision. So, how do we make this operational? Not as slogans, but as steps you can perform in the morning, enforce by noon, and review at the close. In the next section, I'll hand you a checklist, the playbook I run when the bell rings, so the one rule isn't just inspiration. It's instrumentation you can hear in your own trading cockpit. Asterisk A rule is just poetry until it becomes a checklist. Then it becomes protection. I don't want you inspired, I want you equipped. Here's the playbook I run, so never let a small loss become a big loss isn't a slogan on my wall, but a circuit breaker wired into my day. Steal what serves you, adapt the rest, but keep the spine intact. 1. Define the uni, R before AM coffee, before screens wake. I set my dollar risk per trade, my R. It's a fixed amount the market is allowed to take when I'm wrong. If my account is X, my risk per trade is 0.5% to 1% of X. That's not a vibe. It's a fraction. I write it down daily. Livermore respected capital as oxygen. R is how I control my breathing. To pre-commit the exit, price, time, and thesis. For each setup, I define 3 stops. Price stop, the level that proves me wrong beneath the swing low for longs. Above for shorts, not where it hurts least, but where the thesis fails. Time stop, if confirmation doesn't arrive within M bars or the session changes character, I'm flat. Thesis stop, if a market condition required for my idea breadth, sector leadership, volatility regime degrades beyond a threshold, I exit even if price looks okay. This is how I prevent slow leaks. I enter these rules before I enter the order. Point 3 bracket, the order, no manual mercy. I use so CO1 cancels the other brackets, stop loss server side, profit target partial staged. I can still manage actively, but the default is discipline. The bracket is my chaperone when emotions arrive uninvited. For size by volatility, not ego. Position size equals are divided by distance to the price stop, adjusted by ATR. Wide stop, smaller size. Tight stop in a liquid trend, bigger size. The market's mood dictates my footprint. I don't kick the sandcastle when the tide is high. 5 confirmation, then pyramids. I start at 1/2 for 1/3 size. I only add when price proves me right. Higher high with volume longs, lower low with expansion shorts. Each add comes with a recalculated stop that protects open profit. Livermore's add to successes. Never to mistakes, no averaging down. Ever. 6 and no negotiation protocol. If price tags my stop, I'm out. If slippage occurs, I accept it. I do not move a stop away only toward break-even as structure forms. When the urge to widen hits, I read the yellow card on my desk. When a stock proves you wrong, let it. That sentence has saved me more than any indicator ever did. 7 options, decay discipline. If I'm in options, I use time stops aggressively. If after entry the underlying doesn't reach a key level by my deadline, I cut even if price is near flat because theta and for shifts aren't sentimental. I'll also cap premium exposure per name to a fraction of daily R, so time never becomes a big loss in disguise. 8 kill switches for the day. Daily max drawdown at 3R or 4R. I stop trading, not because I'm cursed, but because my mind is compromised. Consecutive losses, 3 cuts in a row triggers 1R flat and a reset checklist. Livermore withdrew after bad tape to keep his judgment solvent. I do the same. 9 environmental guardrails. No social feeds on the first 90 minutes. My edge is reading price, not opinions. I cap decisions per session, say 10. When the counter hits 0, I'm done unless an A+ setup screams in line with the day's trend. Boredom is not a buy signal. 10 review ritual praise the cut. After the close, I grade behavior. Not just P and L. A stopped-out trade that honored the plan gets an A green trade. That violated rules gets a DI screen capture entries. Exits, and the moment of maximum temptation. I write one sentence. What did the market teach me today that my ego didn't want to learn? That line keeps me in conversation with reality. Weekly reset the Livermore ledger. Once a week, I examine drawdowns. Were they from process errors or valid risk? I trim or razor accordingly. If I've violated the rule more than once, I step away for a session and rewrite the scenario. What thought? What trigger? What fix? Crisis playbook when the tape turns violent. On CPI FOMC earnings, I have size or sit out the first 15 minutes. If in a swing and news nukes the level, I exit first, analyze second. Pride can draft a press release. Price can draft a margin call. This is how I translate a sentence into a system. How I make Livermore's discipline audible in a world of algorithmic noise. It's not about being fearless. It's about being pre-committed. The rule lives because I install it where it matters most. Inside the clicks, inside the orders. Inside the moments when one pixel could mortgage my future. Comment which step from this checklist would help you tomorrow morning, and which one will be hardest to obey. Tell me below. Naming it is step 0. We've built the scaffold. Now we end where all great market stories end, not with triumph, but with a vow renewed under flickering screens. In the final section, I'll pull the camera back, a cinematic close on the trader's room, the market's hum, and the simple line that keeps us in the game. When the screens go dark and the P and L stops flickering, there's only one question left. Did I honor the rule that lets me trade again tomorrow? I want you to feel the room with me, the way the hum of the fans becomes a kind of ocean after hours. The way the soft glow of a single monitor turns the desk into a small island of consequence. The charts are quiet now, frozen in their last confession. Somewhere, a headline still scrolls. Somewhere, a bell has already chimed and closed stadium doors on another session of human ambition. But here, in the stillness, I read the floor like an old map, coffee rings like eclipses. A note card with a sentence etched to the point of superstition. A pen that survived a dozen news shocks. And that sentence, Livermore's sentence, hangs in the air with a gravity that pulls everything else into orbit. Never let a small loss become a big loss. If this were a movie, we'd cut to the montage. Trades entered with clean risk. Losers cut as if the button were spring-loaded. Winners nurse with priestly patience. We would watch accounts live to fight. We would watch drawdowns obey fences. We would watch the subtle magic of compounding unfold, not in fireworks, but in the deliberate click of a metronome that refuses to speed up for anyone's heart. That is the cinema I want for you, not the fantasy of never being wrong, but the discipline of never being destroyed by wrongness, because the market, for all its drama, is not a villain. It's a mirror. It lets us see how we behave when no one is supervising the soul. It reveals whether we're married to our opinions or faithful to our process. Jesse Livermore didn't survive because he was luckier than the next trader. He survived because he built a life raft out of one rule and refused to poke holes in it. When the sea mocked him, he didn't ask the ocean to calm. He asked himself to steer. Today, maybe you cut a trade that hurt your pride. Maybe you honored a stop that printed to bars before rally. Maybe you watched a winner stray and sat tight while your pulse whispered sabotage. None of that was wasted. Every correct loss is a small stone on a long road. Every obeyed rule is a stitch in a parachute you don't know you'll need until the day you do. And when that day comes, you won't have to invent courage. You'll have to execute a sentence you already own. Let's be clear, this is not martyrdom. This is mercy for your capital, for your future self, for the craft you chose because the world behind these screens felt honest in a way other work did not. The honesty is this: if price invalidates your premise, you exit. You don't argue. You don't bargain. You don't elevate a chart into a courtroom where your ego plays both prosecutor and judge. You take the small loss with the gratitude of someone who understands the alternative. So take a breath. Look around your room. Make your vow out loud if you have to. Write it again where it can't be ignored. And tomorrow, when the opening prints tempt you with the quick ease of breaking your own law, remember the island of consequence you're building trade by trade, choice by choice. The legend of Livermore is not in the millions he made or lost. It's in the architecture he left us. One load-bearing beam that holds even when the rafters shake. Now it's your turn. What's one concrete way you'll enforce this rule in your very next session? Share it below. Your answer might be the note another trader tapes above their screen before the bell. I'll leave you with the closing line I say into the dark after the fans finally wind down. Protect the downside, and the upside will introduce itself. Guard that sentence the way a lighthouse guards a coast. Let the market be vast and merciless if it must. You, at least, can be clear. Trade well. Trade small when you're wrong. Sit tall when you're right. And live to write the next chapter tomorrow.